I want you to picture for a moment exactly what your life would look like if you were a millionaire. The truth is, you would have a lot of the same concerns, consistently working hard to grow as a person and develop fruitful, loving relationships all around you. Your greatest concern in life would still be your health and the health of those around you. There would be one main difference though, and it's an important one. You would no longer have to worry about money. You would have the freedom to do what you wanted, when you wanted. You would have control. Financial freedom is the freedom to be able to make choices. The choices about what you do with your most precious resource, your time, who you spend it with, and where and what you do with it. I want you to open yourself up as we begin to talk about what it takes to become rich trading. Traders are often very concerned with how much money they can make and how quickly they can make it. And each day and each trading session is approached as almost the improbable or impossible. The reason I want to share this formula with you is because it's very important to have the correct mindset, the mindset of an investor. And it's important to focus on this formula for the bigger picture. And this is going to help you to be able to execute, which is what you need to do in order to achieve your goals. You need to be able to execute. So let's take a look. Starting with a $3,000 balance. How do you get there? How do you achieve your goals? Where are you starting from? If you're starting with just a $3,000 balance today, and you were committing to making for the next 5 years, regularly, yearly, another $3,000 deposit, what is that? Like $260 or so a month. Go ahead and take a look, and the rate of return. You know, holding Bitcoin, what do you think you could do? What do you think you could achieve yearly? I think the average rate of return annually is something closer to about 120%. Take a look at some of these numbers. 2017, 1300, 2020, 300, that's 2019, 87, and 2018, 72. These two cancel each other out. You're looking over 4 years, 1,600 divided by 4. You're looking at 400% a year. There you go. Mean annual return, 400%, showing the percent change for every year into Bitcoin. It's a couple of down years. 2022, right? Good chance it's a down year as well. That's what I'm expecting. Not being invested, whether that's worth it to you during these bear market years, it could have a significant change in your overall accumulation. That's for some more advanced stuff. So you can see, even if we did experience something like drastically diminishing returns, instead of 400% over the last 4 years, maybe we're looking something forward at like 200%. But even if we only get 70%, what happens if you use something realistic? What happens if you use something like a 30% return over the next 5 years in Bitcoin? You're looking at taking a total deposit over 5 years, $18,000, and growing your account to $46,000. That's only over a 5-year period. But it's also with a 30% return. I think that I personally expect to achieve over a 70% return annually in Bitcoin over the next, 10 years? Absolutely. So let's take a look at that. Let's make that 10 years, 70%. I think underestimating greatly over there. We'll see. We don't know. I think it's safe. I think it's safe to work out my plan using 70% expected return in Bitcoin over the next 10 years. And then you're taking that $33,000, you're turning it into $2 million. Now, $2 million is comfortable. You could basically buy whatever you want whenever you need it. Really very comfortable. But the thing is, when I first started doing this, I did this with 11 years. It was an 11-year plan with 3 halving events. And if you really want to plan this out correctly, starting today, you could go ahead over the next 11 years, expect to have 3 more halving events. Next one, it's every 210,000 blocks. Next one, estimated 20,024, 20,028, 20,032. But the thing is the bull market happens the year after the halving. So you're going to want to make this a 12-year plan, 70% annual return. Now you're looking, total deposits over those 12 years, $39,000, $3,000 a year. You're committing to this plan, to your investment plan. And then you're looking at, $5 million if we hit our expected 70%. Anything could happen. Understand your risk and what your risk is before you make any investment, and do not invest any more than you could afford to lose. But make sure you make calculated risks. Is this a calculated risk? Now, if it was just an 85% annual return in Bitcoin over the next 12 years, you would be looking at something, $15 million. That's from here on up, you go on borderline ridiculous for a 12-year plan. But, 70%, 12 years, next 3 halvings, you're starting today. $5 million is rich. $2 million, you're definitely comfortable, no question about that. But $5 million, I would say that it's a great plan to have in place. I think it's foundational, fundamental, that anyone beginning before anything else should have this plan in place. And then you could go ahead and leverage different investments. Why does it matter? If we're experiencing diminishing returns, then we want to be following a roadmap, a guide that is giving us that clarity that we could position in and out. If you're just buying Bitcoin and holding it for the next 10 years, you don't have to do anything. You could walk away. But if you're trying over those next 2 years, where you already have that fundamental plan in place to acquire as much Bitcoin as you can and doing it in a very calculated, risk-averse way, then it really matters to understand these price movements. 150 days, that's a small time frame to be looking at and considering for this type of investment. The 2012 cycle, you can see here in 2013, peaking higher. This is 11x, an 11x, 7x. Are we going to see something like a 9x, something in the average of the two? As we've seen up until this point, this cycle has been an average in volatility to the upside. It's been an average of the 2 cycles in volatility to the downside. And as far as consolidation and sideways so far up until this point, it's been an average of the 2. Will the return also be a 9x? If I can get it, I want it all. I will take what the market gives me, though. Mic check, mic check. What's going on, everyone? Good morning. Happy Monday. Good afternoon, good evening, wherever you are in the world. I am so glad that we are here together as we get ready to kick off this week. What another important week it's going to the work that we've done over here, Summer Crew representing, has been absolutely, listen, it's history being written and it's beautiful. We're all over it. I love doing it with y'all together. Looking forward to this session. There's a lot to talk about. Before we do, let's start over here. Let's start on our our syllabus, our thesis, whatever you want to call it. What's keeping us on the right side of the market? Do notice that nothing has changed. Bitcoin price predictions for this cycle have remained static. Now, just rewind just a few weeks ago, that was entirely different across the board out there on crypto Twitter and anywhere else in the space. All of a sudden, people walking back predictions and or thoughts, oh, well, don't worry, it's gonna run longer. And we're still going to make that $100,000, even if it's sometime in 2022. We've maintained where we are, the script. Greg, what's going on? Good morning. Good morning. Yeah, listen, if you're new here, welcome. And if you're not, welcome back. This is Jordan with Conquer Trading and Investing. This is CTM, the best there ever was, right? Status is being changed. What are we changing it to? There's a high probability the mid-cycle low is now established now that the mid-cycle breakout has occurred, right? The second phase of the bull market is now in play. It's something that we've been setting up, right, for a while. Now that it's occurred, we have to update the status over here. We're looking forward to the double wave into liftoff, right? Cycle peak approximately 150 days from the mid-cycle low. Price peaks in 2021, assuming the low is in. This is the bullish case for Bitcoin out of CTM over here. Notice we had a breakout, retest, and now resuming off over here from the most important trend line in crypto, conquering the markets all day long. But I don't have to tell any of you that, because each and every one of you know that. And that's the best part about all of this. If you imagine, 4 years earlier, the amount of TA ability out there in the space compared to right now, it's significantly different. What's happening here across the board, iron sharpens iron, is absolutely it's really beautiful to see and witness. And I know that each and every one of you had the awareness, not only out of the breakout of the descending wedge, right? Not only the breakout, but the move into the resistance, the bear's opportunity to defend, the move they put in, the bulls regaining control, breaking on the second attempt. That's exactly as we foresaw it. Do you remember that as price broke out of the descending triangle, descending wedge? I said, look, the bears' next opportunity to defend is going to be in the most important trend line in crypto. Most likely, they're able to put up some type of defense off the first push. It's the second push I'm interested in. If the bulls are able to break, that says that the bulls have a lot of momentum. That's what happened. And since we've had the breakout, the retest, we are resuming off. And there it is right there. CTM all day long. Let's take a look at the bearish case for Bitcoin. That's right, Danny. That's right. That's exactly right. Just for clarification, there's, Danny, not for you, of course. For many others out there, like many are called and few are chosen. I do want to bring as many people as we can with us and continue to do that. I know a few things, right? What do I know? I know that that there's a second wave of CTMers who are now positioned coming out of mid-cycle into the cycle peak. I know that there was a good degree of CTM without having to speak about it, that knew when was the time to put on the leverage, right? And have been doing that. And now coming out of mid-cycle, coming out of the breakout of the most important trend line in crypto, are positioned perfectly. I know that we have to be careful about the language we use and the communication we use, because a lot of people out there are just really confused. They're really lost, right? So, but I do know that the work that we did here together in 2021 specifically, whether it was in April and into beginning of May, planning out everything that's happening right now, as we talked about what it would look like coming out of that mid-cycle low into that double wave, into that cycle peak, and then Ian going ahead and like displaying that thesis down on the chart to make it as clear as possible for everyone. I mean, you can't get this wrong. Look what the double wave, which I was talking about, the double wave into the cycle peak. Ian draws his beautiful artistry over here, giving everyone the roadmap. Will it play out? I have no idea, but up until now, it certainly has. That's for sure. Making sure that we continue to ride this thing. What else do I know? I don't know. The bearish case for Bitcoin, right? Let's take a look at it right now. It's ever since the most important trend line in crypto has broken, the bearish case for Bitcoin has significantly declined. Right now, you have some traders looking at possible like moving averages and or horizontal resistance as the last thing getting in the way between new all-time highs. Now, a few weeks ago, it's true, many people did not even foresee new all-time highs happening anytime soon. Now, I put out that tweet, and the tweet with like the current price action, and it's showing those two moves of the yellow lines, right? It's a V, it's quick, and it's sharp. I don't have to say anything because CTM knows. Everyone who is paying attention understands the price action coming out the mid-cycle low or the expected price action, right? How far are we though? I'm not using the price low. I'm just using the close low over here to make it easy on myself. We've come off 54%. That's significant. Why? How much further room do we have to the upside over here to make a new all-time high? Another 40% less. Wow, that 50% move has unfolded rather quickly and rapidly. Is it possible that we continue at this pace? We'll see. If you consult the goods over here and the model showing us that it's quite possible, right? Coming towards that new all-time high, that's the completion of the first wave. We're looking at the double wave into cycle peak. It would make sense for us to come in and test that new all-time high, maybe not break it, maybe break it before coming to that peak, the crest of that first wave, and then that will be like everything is continuing to play out on time, and I don't even know. It's getting nastier, but tomorrow I'll bring up the tweet where I'm showing the two. Maybe it'll come up in this episode. We got a lot to talk about. Let's keep going. This is the bullish case for Bitcoin. Looking at Bitcoin on the log chart. Imagine. What else do I know? I know that we're light on likes. We got a significantly low amount of people. No, we have 900 people in here today, this morning, on this Monday morning. If you would take a moment before I go forward and unravel today's session, please go ahead and smash that like button. help the channel with the Google algorithm. Really appreciate all of the love that you guys share making this CTM all day long. I'm looking here at a log chart, the bullish case for Bitcoin. I also know that a lot of CTM bought the dip. I know that, like, if you were to look at CTM and say that, like, oof, the percentage would be so high, it's ridiculous. There was a lot of fear and uncertainty out there, no question about that. I know that most of CTM leaned in. Most got better prices than myself, right? I bought the dip at 39,000, 33,500. I saw Brad getting the dip in around 30,000. A lot of you getting it much lower with that precision. I'm grateful for it, right? Let's take a look. Look at this beauty over here, though. There's 3 or 4. Let's take a look at this. This is the tweet that set it off. Price continues to trade above the 216 cycle and below the 2012 cycle. What does that mean? Tomorrow, by the way, I want to do it. I want to show you how we're outperforming when you look at the halving event into the breakout of the most important trend line in crypto. How we're outperforming using measuring from the halving event to the breakout in the previous cycle, that we are continuing to outperform that 2016 cycle. Now, we attribute it to what? The uber easy monetary policy and the QE, right? Nevertheless, that there's a lot of people out there, especially even just a few weeks ago, who are pushing diminishing returns. I'm not talking about the good ones. I'm not talking about Ben, right? I'm talking about, like, a lot of people capitulated. And I said to you as it was happening, a lot of people are mentally capitulating. This is a bullish sign. You all picked up on it, right? Anyway, let's keep going. Where is the flow today, right? Price trades. What else could happen? Could price trade below the 2016? My base case continues to be, and by the way, I was looking this weekend. If you haven't seen it yet, in the exit series on the CTM recommended playlist inside Discord, when I sat down with Ted and Ian and we did our last Hive Mind session CTM, we were months in advance game playing forward everything that's taking place right now with Ethereum, with Bitcoin, them coming out of the mid-cycle dip. You have to watch it. It's the best stuff out there on the internet. If you're playing from a handicap, if you're not following everything that we're doing over here, right? My base case continues to be that, coming in from tracking closely that 2012 cycle, that double wave, that now we're going to be coming out of this tracking more of that 2017 bull market phase. I have it over here somewhere, right? Interested to see if Bitcoin, is there a way on this is Google Notepad or something like that, or Google Word, whatever it might be. Could you find out when this was written? I would like to be able to find out, but I'm interested to see if Bitcoin begins to more closely resemble the 2017 bull run into cycle peak. I think it's going to do that, though, outperforming. I think it's going to be above this blue line, more so towards where we have the most green overlapping. That's because I think that this cycle continues to outperform. Now, is it possible that we trade below the 2017 trajectory? I mean, it would still be within the model. Ted's allowing for the deviation to the downside. Yeah, it's possible that we have diminishing returns, $160,000. That's how we did the math from the beginning, right? Is that possible? It's not likely, but it's possible. Is it possible that the 4-year cycle breaks and that this is the last cycle, or, last cycle Willy Woo or Dan Held super cycle? Right? The first outcome continues to hold the maximum likelihood that price continues to trade above the 2016 cycle and below the 2012. We'll continue to watch it. CTM has held this belief the earliest and the longest, right? I love this, by the way. This was shared. This is Ian giving us that perfect roadmap, and we'll continue to track it and see. I mean, so far, Jesse, by the way, later in this video, I'm going to show some beautiful chart work. Well, here it is right here. Jesse giving us that great clarity as well, another view at it. And that's why I love CTM. It's just complete. It's hive mind continuing to make sure that collectively we're able to stay as focused and as sharp as possible. Jesse, love the work that you put in, love the clarity, the way that you interpret it, everything being presented over here, and just continuing to bring that clarity for everyone. right? Then this is what I meant to say that I loved, right? When I said that CTM has held the belief the earliest and the longest, we got Air Jordan out there dunking on everyone. Because that's the truth. CTM has held that the earliest and the longest. It's what continues to be the base case for the rest of this cycle. A lot of people will catch up to us during this period. As we hit liftoff, right? As we come into like the 35 period and day into the cycle peak, and once price is actually going vertical, you're going to see then all the analysts out there, revert to the model that we've been holding. That's my belief. We'll see what happens. We're going to be watching it in real time. On-chain analytics. I meant to pull up. Ted was the first one again to introduce me to. It's a series of all on-chain analytics, and it then just goes ahead and assigns a number between 1 and 100. Where it is right now, it's somewhere like, I don't know, in the 50s or 60s. It's not close to being towards that top. I think it's probably, well, tomorrow we'll talk about it together. I'll present it and we'll talk about it. It's the only on-chain indicator we need. However, we do have Alan Au. We have Alan Au breaking it down. And the advantage of Alan Au and why he's that like hidden gem is because that he's able to do it not only with on-chain analytics, he's also able to do it with that hot TA. And you have to combine the two. If you're just like, you need to have all these skill sets and merge them together. It's like trading an instrument just off of technicals. I mean, for decades I attributed myself to be a technical trader. I don't know. Is there anyway, but when you combine fundamentals with technicals, that's when the magic really happens. It's the same concept. Not only should you consult what's going on chain when it comes to Bitcoin, but you have to have that CTM TA in place. This is what I believe is probably the single most important chart out there. That's not even true. This is not the one that I wanted. I don't want between 0.01 and 0.1 Bitcoin, but it serves the purpose as well. I wanted to show you 0.1 into 1 Bitcoin. It's the same thing that we're seeing here, and all these people or all these wallets in this range over here, and you could see that no matter what happens with price, they just continue to climb and climb and climb. By the way, we're over here right now. We are over here coming out of that mid-cycle shakeout. You could see how price is really coming up. Could you imagine these next 4 months how price is the adoption should be vertical as price attracts massive amounts of people to it. But in that bear market, you'll still see that adoption continuing over here in Bitcoin. But it's about to go parabolic. That's what I believe. One of the most important on-chain charts over there. Look, I got for those of you that missed it, you need to know what's going on. Let's talk about it. We have checkmate, right? Checkmate. Meanwhile, what's CTM doing? CTM's like pawn to E4, boom, what's up? People who focus on cycles will miss the forest from the trees, right? Checkmate is an on-chain analytic guy who first came to my attention with some interview he did on Pomp's podcast, right? It creates, if you're following cycles, it creates undue and unnecessary bias, right? But if you're following what's going on chain, by the way, it gets confusing when you're following on-chain analytics as so much is beginning to happen off-chain on the second layers, whether it's Lightning Network, whether it's Liquid, they continue to increase in adoption. It makes it harder to follow what's going on chain. I think that's a trend that we will see going on in the future. We have unprecedented data into supply and demand. On chain, they could track. I have Glassnode, a subscription to Glassnode. I don't ever use it. It doesn't offer me any benefit. The whole reason we have gotten where we've gotten with the laser-like focus is by following price on the charts. And ultimately, price and price alone tells you what's going on. We have the advantage of the awareness of the 4-year cycle, and we have the expertise of technical analysis to kind of like merge together, right? Is that a greater advantage than what's happening on chain? I believe so. It doesn't really, anyway. Cycle analysis makes it feel easy, which now that we have big money in, they will fleece cycle believers for coins. All right, then we got the root. You remember that beautiful interview we did with the root? The root bringing signal. You're right about it creating a bias. History doesn't have to rhyme, yet many times it does. hey, I'm all for observing on-chain data, right? I want to know what's going on chain, especially useful for the short term, but recognizing a mid-cycle dip based on previous cycles is very useful confirmation to me, right? Do you remember how we were the first ones here together on CTM, by the way, to be looking out for a mid-cycle shakeout, right? And it was appropriately named mid-cycle shakeout. Now, we didn't know how it was going to look or exactly how it was going to unfold or when it was going to happen, but around the right time, weeks before it happened, it's all we spoke about, right? And then it happened. The only way we knew that was going to happen was because of past cycle behavior, right? Checkmate goes on though. He goes on to say, listen to Root, you don't know it's a mid-cycle dip until we set a new higher high. Here's the difference between what I consider to be TA expertise and not. He's saying, look, price is still below the 200-day MA. I mean, the 200-day moving average. Do you trade off the 200-day? And a perfect spot for a lower high, still not understanding that once price breaks out from that mid-cycle, from the most important trend line in crypto, I mean, could horizontal resistance actually get in the way and stop Bitcoin from making that new all-time high? Is it likely that that is going to happen? I mean, we understand that the first wave could peak towards that. You know, we could outperform that, we could underperform it, but we should be more or less in this range around that new all-time high. But that's just the first wave, right? A 200-day moving average, obviously we're not going to consult moving averages. We understand that trend lines carry much more weight. And once we broke the most important trend line in crypto, as happened in all previous cycles, right? Nothing stops price going from that new all-time high. There's nothing yet left in the way. The bears' opportunity to attack was off the most important trend line in crypto. And that could have held. They could have put up a better battle, right? But they didn't. It was possible that price could have then been rejected and taken out that low. And we had a different cycle low that we needed to line these things up. But once price has broken out now through the most important trend line in crypto, the odds have significantly diminished that a new cycle low could be put in, right? Anything could happen. It's the markets. If we do see some type of failure take place, we will be there and we will know. See this red line? You know, get below the most important trend line in crypto, get below that red line, and all of a sudden things have drastically changed and the probability of price making a new mid-cycle low comes into play. But that's not the base case right now. There's a strong probability that the mid-cycle low is in, and it is a matter of time before we. So my response to that is, hey, if you don't know we are mid-cycle, you should spend less time on chain and more focus on the 4-year cycle, right? There's no one out there who shouldn't have the awareness that we're mid-cycle or that we were mid-cycle. And if you're lacking that awareness, then listen, you should spend more time on that 4-year cycle. You should look at what happened at the past to give you an idea of what's expected, what should happen, not what will happen, right? Benjamin, over the weekend, putting out a tweet yesterday talking about you could use past behavior to see what can happen. It doesn't mean it will happen, right? So anyway, so I point out the chart that we did well in advance of what is, expected to take place. And if you look at price right now, hey, wait, it's unfolding. It's unfolding. And he doesn't really know what to do with that, checkmate. He takes it out there and he's like, I don't even know where to start. So I let him know, listen, if you don't know where to start, start over here, right? This is how you model Bitcoin. This is going to give you some type of clue and understanding to where we are and why, playing out the model. But let's go. Let me keep forward. Will steps in. Will Clementine steps in and he says, Jordan, I respect you, but I'm with Check here. Bitcoin has historically, so now we got on-chain analytic guys over here having one view. This is very important for going forward, right? This is the advantage of having many different type of Bitcoiners out there working together. That does not mean that you have to agree. That does not mean that you have to agree whatsoever with each other. It's better if you don't agree, right?
I look forward to working with Benjamin, and it's not because we agree about everything, but because the insight we're able to offer together is only going to help bring us further clarity. Will over here, he's like, listen, Bitcoin has historically moved in a 4-year cycle, but once we reach the critical threshold of adoption, it becomes more based on raw supply and demand markets than anything. I envision Bitcoin becoming more free flowing in the future, right? Absolutely. Once the adoption curve begins to flatten out, which is not for some time, this cycle or next before the earliest possibility, right? 2028, 2030, we have this cycle. We have most likely the next cycle. The earliest possibility we could see the curve flattening, is coming in towards 2028 into 2030, right? Until then, it's early adoption. I mean, right now we are in the early adopter phase. And by the way, this growth is starting to run hot. Is it possible, or what the on-chain analytic guys are thinking is that what's going to happen is that the adoption rate is going to go vertical, and this will become, the last cycle or the super cycle? It's a possibility. Adoption continues to race and run. So it's why I want to understand what they're saying, right? In case that's what is happening, we're able to then make sure we position ourselves the best. But the base case is that, we have this cycle playing out. We have next cycle playing out. It's possible the following cycle after that, or the one after that, is where the adoption curve really flattens out, and then so does the price rate. The cycle is outperforming the previous due to uber easy monetary conditions and continued QE. Again, CTM, the only one across the board. When I say across the board, I mean the whole interweb. The only one who's been on signal for that and for the longest. That the reason we're seeing not diminishing returns this cycle, the reason that this cycle continues to be closely in sync and outperforming the previous cycle is because of what? The central banksters, the Federal Reserve, and their monetary policy. Which reminds me, while we're on that note over here, right? This is probably the most important thing to focus on in macro. We had Friday's strong payrolls report. You remember, it was 2 months ago, I said we need to start paying attention to payrolls reports again on the first Friday of each month. We have fanned expectations that the Federal Reserve, may start soon paring back its massive monetary stimulus, not quantitative tightening, but less QE purchases monthly. That comes as the ramping Delta variant could lead to a slower. Do you remember we said before the summer, by the fall, most likely we're going to see the whole variant narrative pick up, and that's going to put pressure on the markets again. And then the Fed might need to actually, instead of pulling away QE, might need to come in stronger. I mean, it's on the table. That's a possibility. We don't know if that's going to happen. But, we have we also in the mix are rising price pressures. They're talking about the Delta variant now causing more inflation because of supply chains being disrupted once again, right? What's going to happen, Jackson Hole? That's where we are in the macro. That's what we're watching. Continue just to make sure that we have our pulse on the market in all ways. Right? So then Root goes, Will, so far this cycle is exactly in line with previous cycles, right? You can't call a top in the market or a bottom in the market, until you have that confirmation. The on-chain analytics guys calling that the 4-year cycle is broken before it breaks might be a little bit premature. I mean, they might be calling the top on there. They might be calling the moment the model broke ahead of time. And if they did, I mean, hands in the air, you guys are like so solid, it's ridiculous. It's why I'm paying attention from afar. Isn't it a little early to start the missing cycle theory, right? I'm all for focusing on supply and demand too, but agree with Jordan here. And then Will goes on, yep, I guess what I'm saying is my base case is that we move away from cycles, so I'm not operating under that assumption. Is this perhaps another 4-year cycle? Very possible. You mean probable? We will always have them? Absolutely not. Yeah, but you're 8 years early. That's very, in the markets, that's very far away. But Willy Woo, he doesn't think so. He says 100%. I think that this is the last cycle. And listen, we're going to know it won't be long until we find out who was right. Consult those with a history of being right, right? And it's important as we go forward. In CTM, in my probability, right? High probability the mid-cycle low is established. Now that the mid-cycle breakout has occurs, the second phase of the bull market's in play. Here we are right now. It's off. Double wave into liftoff. Cycle peak approximately 150 days from mid-cycle low. Price peaks in 2021, assuming the low is in. Some people couldn't understand. I think a lot more people understand what's going on right now as we're seeing, like some people were able in their mind to play out what was going to happen. And others, now that it's playing out, are able to get on board. You're so early if you're right here at the break of the mid-cycle. Why do I say that? Because I've been trying to tell everyone, right? From the break of the mid-cycle, we're looking at potentially a 9x. If we continue to be an average of the previous two cycles, that would be like a 9x. Now it's possible we have a 7x. That's what Bitcoin did 4 years ago from its mid-cycle breakout until its 2017 December cycle peak. Or that we have diminishing returns. All those things are possible, but this is the time over here that you could manage your risk the best. Why? You know where you're wrong, right? Price makes a lower low, new mid-cycle low, you're long. We have the red line over here. If you want to reduce your risk a lot quicker and sooner, you're able to manage your risk here with the potential profit being pretty significant, right? And that's why I believe that all the work that we were doing over here helped get a lot of people positioned, whether it was buying the dip and or leveraging in smartly. Experts only. Do not use leverage unless you're an expert, right? And other people are wondering, hey, well, all you did was continue to move, lining up the bottom over here of what happened in 2017 in Bitcoin with this chart over here. Is it made? Well, that's what we said from the very beginning. We first line things up from the halving event. Then as price makes that new all-time high of the previous cycle peak, then you line each cycle up from that point. And then we said, listen, when the mid-cycle low is in, we're going to line everything up from that mid-cycle low. So until the mid-cycle low is in, we had to keep lining it up every time price made a new lower low until we finally got the lower low. All right. I want everyone to be with us. I truly do. I want everyone to be with us, which is why we explain things that most of you already know. But I am interested. On-chain look, I'm interested. This is very important. I'm interested. By the way, if you haven't yet, could you smash the like button? I'm interested in any new data indicating anything different, on-chain or otherwise. This is how I live life here, specifically with the most important trade that matters, right? If Willy Woo, if William and Checkmate, all on-chain analytics guys, are saying, hey, listen, this is now the last cycle and the 4-year cycle is broken, well, why are you saying that? Because I haven't heard anything whatsoever. When you talk about, well, because the institutions are here, so, but how do you back that up with data? What have the institutions done so far to change the supply and demand dynamics, to change, as the root also got, the psychological dimension of what happens with coded monetary supply? Where are those changes that are occurring so that I could get in front of them? I don't see anything changing whatsoever at all up until this point. One thing different, though, is we're seeing increased returns over the previous 2016 cycle. This is different, right? Do you remember 2019? My thesis was we saw diminishing returns. And then as the Fed initiated QE and we saw the massive expansion of the Fed's balance sheets and central banks' balance sheets, and price was behaving differently, that was updated. You know, we're always trying to, as quickly as possible, get as clear as possible. If you're measuring from the halving to mid-cycle low and or mid-cycle breakout, that's different. Why is no one talking about that? You guys are talking about diminishing returns, but no one's talking about the increased returns taking place. It's a significant difference. I attribute it to the Fed and to the QE purchases, right? And then here it is, right? Oh, one more further down, Jesse's work over here, right? Jesse talking about the 3 reasons. I believe that we're also going to peak around, he puts it at December 19th, exactly, plus or minus 2 days. And that type of accuracy is CTM all day long, right? Jesse taking everything that he's learned, putting down his artwork over here, making it clear for a lot of others out there, right? Boom, boom, boom. Let's keep going, right? Michael, Jordan, Jesse. I'm riding. Check this out. I'm riding with the CTM crew because of the hard work and study. It's that collective hive mind mindset, right? This is what we have here. It's called the CTM model, right? It was what I was working out on the daily live streams. All of a sudden, Ian takes the baton. He's like, Jordan, here's your vision with like the greatest clarity that you could put out. And let me get like professor detailed on it for everyone. And then Ted's like, oh yeah, I see you. And I'm going to go ahead and like, boom, put down the CTM model over here. Jesse jumping in, everyone working together. So listen, we have 4 narratives in the crypto space in play for this Bitcoin cycle. Here are the 4 narratives. It's the CTM model of December 2021, right? Now that's assuming that and high probability that mid-cycle low is in. That puts our cycle peak in December 2021, right? I believe out of all 4, this is the one that's going to be correct. We have Benjamin Cowen's May 2022 model, right? Now, I think Ken also has a peak of lengthening cycles also out in 2022. I consulted all sides. I wanted to make sure that I had all visions. But when you're just adding, 43% on to the previous length of the previous bull market and coming up, I don't think that's going to play out, right? Benjamin, listen, if we see we didn't peak out in 2021 and the mid-cycle low is in, I know that our model is not the most accurate and or correct. I'm definitely going to be following Benjamin's work more closely, working with him. And I want to work with Benjamin, but here we go. I just sent him out, a message. We were talking and I was like, look, I was watching your video on the expected Bitcoin price at the 2024 halving. That's a very important piece of data, no doubt. Your expected halving price of $40,000 to $50,000. But, and here's the video over here. It's this video he put out in May, recently, 2020. And he's talking about where he believes the 2024 halving price for Bitcoin will be. And he puts it around $40,000, $50,000. I'm like, Ben, that's an important piece of data if you can know that in advance. My bear market low in 2020 is actually in that $50,000 range, right? Which means price at halving would be significantly higher. I'll find you a clip so that you can find out how I work out my bear market low. You've all seen it, right? But it's pretty significant. If working together, we could find out, not only what the 2024 halving price should be, and then see who's obviously correct. It's important to follow those who have a history of being correct, right? I like Ben. I want to be able to work with him together on that. Willy Woo, no more 4-year cycle. The last cycle, that's also Dan Held's super cycle theory, right? Those guys putting that out there. Again, if we don't peak, assuming the mid-cycle low is in 2001, December, then we could say, hey, pay attention. But until then, I would like to know a little bit more about why you guys are all saying that. Again, what data is leading you to believe that? And this one I was not familiar with, right? But BitBoy putting in a September, October prediction. So this is interesting though. And the reason I'm highlighting this one is because if you're using the golden ratio of Bitcoin, that should put your peak out there in October as well. If you're using this and the root is not, do not get confused. The root is just laying down data over here, but judging from or lining these up from when price made that new all-time high, right? As price took out 19,400, that December 2017 high, and all previous cycle markets, new all-time highs, it took them 288 days to make that cycle peak. That puts us right now in the middle of September 14th. So is it possible that something like that could transpire? It is. It makes, I don't know what BitBoy's theory is behind that, but using, September, using this right here, 288 days on average between, 289 days in 2017, 287 days in 2013. That would lead you to a peak around September the 14th, right? In October, if you just use the golden ratio, how long the bear market low up into the halving event, and then that many days forward less 2%, that would put you in October. So that's, I mean, listen, it belongs up here. It could happen. Let's see if that happens, right? That would be, CTM for the win, though. I think that's where we're headed, right? Jesse's saying, look, there could only be one of these that work out. It matters to get it right, right? We'll see how it plays out. Once I back tested all the experts, I chose CTM and then just tried to add value myself. Iron sharpens iron. Jesse, thank you so much. You add tremendous value all the time and every day, and I'm grateful for you and your hard work. And when I say that, that's not only to you, Jesse, it's to everyone helping make CTM what it is. I'm grateful to all of you, And look at this beautiful work. This is like a close-up of Ian's, chart work over there. And look at coming off the low over here into the most important trend line in crypto. Is this wave one? Are we going to be within this range, continuing to outperform the 2017 bull market run and below that 2013 bull market run? We'll see. We're tracking it. Look, I don't have a crystal ball and I can't predict the future, but I can put the work in. I could do this every single day with you, Monday through Friday, making sure that we're putting in the time and the work to put together what we've done here. And what we've done here so far to date is absolutely legendary, but really legendary. Like, let's see if we continue to get it right. But so far, and up until this point, no one has gotten it as correct, including, by the way, we put in one repair. When you talk about that shakeout that did occur, right? Hold on, let me come on to it. Come on. By the way, I X this out, the current risk, most important trend line in crypto breakout failing, and a new mid-cycle low is put in. That's our most. Is it possible that Bitcoin, trades down to the mid-20s and 2,000 probable, right? That's not even a risk right now that we've broken the most important trend line in crypto. If the most important trend line in crypto fails, then this would become on the table again. But listen, we only took one repair on June the 28th, right? Right over there. Let me find the best chart to display that for you. Right over there on June the 28th. The only repair we took since getting on the sidelines over here. We called the first repair. It held. And then so far, after the breakout of the descending wedge, and we talked about what price would look like coming out of that breakout. It played out exactly as the only way that we do it is by putting in the work every day. And if you're interested and to have the same focus that we have, the same understanding, it starts with an investment of your time. You have to put in the hour each and every day to stay with us. And that could mean that out of that hour, maybe there was only a few minutes of nuggets. Maybe there was only a few minutes of pure signal, but you can't get those few minutes without putting in that rest of that time and work. It's how it works. All right, everyone. Infrastructure bill, right? How is the market? Bitcoin. Everyone has stayed up. I've highlighted everything. I've liked it, on Twitter over the weekend. If you're a little behind and you want to see what's going on, you can just go to my likes over here on my profile, and you'll see the most important signal that you should be watching when it comes to the infrastructure bill. What does it mean? I'm watching price. Right now, price is not really concerned about the infrastructure bill. There's a lot for you to get read up on, and how awesome it is that it's the Bitcoin block that's holding up this infrastructure bill. Think about that for a second. Think about what's going to be happening in politics with the Bitcoin block 4 years from now, 8 years from now, as we get bigger and as we get stronger, right? But the market and price right now is not, pricing in any concerns. That could change, and we'll know it changes by what happens on price. If you're following price right now, you have this, first of all, as long as this trend line holds, this is just uber bullish, right? If that holds, the bears have the opportunity to test the most important trend line in crypto once again, but we're seeing a confluence of support coming in from this red line, connecting not on this chart, by using the candles, so I could see the lowest price points over there. I connect from the wick in this case over here. I'm not connecting from the body. And yes, that is subjective. It's no hard and fast rule for myself. I look at the market and I decide what the market's paying attention to. And that's what I pay attention to. We have that support coming in from that line. And that's also support coming in from the most important trend line in crypto. So, as long as this area is holding, we are bullish on a successful breakout. If we were to break below that area, at that point, that's the bearish case for Bitcoin gaining the upper hand. And then we're talking about the possibility of testing that yearly low and or breaking it down. Could that happen if something happened over in DC? Could that be? Yeah, but right now price is not really showing any concern about what's happening in Washington. All right. I don't know anything about that. Like I said, I wasn't familiar, Nightbird, with BitBoy and anything that he was, putting out there. But look, I showed you why September, October could potentially be in play. So I don't know if those are his reasons or not, but those are CTM reasons. I think that's more significant. So when we talk about the four narratives, we'll continue to use whatever. We'll call it BitBoy because it's fun. All right, everyone. All right, CTM modeling crew at its finest, right? June the 29th. There you go. So it was at the end of June that I was wondering whether or not, or the first time it was jotted down in notes, whether or not coming out of here that we continue to follow more of that 2017 trajectory, outperforming it. We'll see. Good session, good Monday session, right, everyone? We covered a lot, but I couldn't have the opportunity to see what you all were chatting and talking about. I'm gonna play some Honeymoon over here, some Honeymoon instrumental, no vocals, and see what's going on with all of you this beautiful Monday morning. Yeah, Anthony, we'll talk about that in 1 second. I saw it on gold. I didn't know they did it on silver too. John, that's a good question. Lots of good questions here. Nate says, I appreciate BitBoy's energy and what he does for the space. That's cool. If you know a good video, send it my way. I would be interested to learn more. That's right, Peter. Thank you so much again for taking the time to thank the moderators, contributors, and all the positive participants for building and supporting this oasis of clarity, learning, profit, and charity. Blessings to all. Thank you, Peter. Thank you, Alan, for that reminder. Oh, the dollar sign, that would be lovely. That would be such a beautiful, thoughtful gift. So thoughtful. Thank you, Sandra. Thank you, Gina. Thank you. All right.
couple of things that we want to highlight over here. We're going to start with Alan Au. Will's thesis is that the halving causes the supply shock will have a lesser effect. CTM all day long, right, Alan? We've hit on that so many times, except we don't believe that happens until we get towards the flattening of the adoption curve. If Willy, let me highlight that again. If Willy believes the Bitcoin goes to $100 trillion, even if the mining reward is reduced, the effect is right, 100%, right? If Bitcoin goes to $100 trillion market cap, I don't know about, that's possible. It's possible, right? I'm not worried about that right now. Those are lofty goals. But yeah, listen, that remains our base case, is that the miner's reward, right, as you go forward, will cause less of a supply shock going forward. Actually, by 2028, we are looking at diminishing returns. There's no question about that. It becomes more of a supply and demand instrument. But between now and there, there's no way, in my belief or the way that I see it, that the next halving event is going to not cause a massive supply shock. We'll see, right? Listen, this is a good one too from Frey. If the parabolic move starts now, right, maybe we should be lining things up from the September 2017 dip instead of the July 2017 dip. So this is a good one. We're not lining them up though from September by month. We're lining this up from when price made that lowest low. That's why we're lining this up. Now, I wonder myself, or I've done the work, whether or not after price breaks out the most important trend line in crypto, if that's where they should be lined up from, right? But I concluded it's not necessary. By using that cycle low, the behavior on all three cycles was pretty much so similar that there's no need to then to line them up from when they break out of the most important trend line in crypto. It's the same thing with coming into wave one, the end of wave one, or into lining them up from liftoff. We're hoping, or the base case is that we don't need to line them up from anything else, because it will be 150 days approximately into that cycle peak. That we don't need to get any more accurate than what we have right over here. And I mean, look at these guys hitting the bottom of liftoff exactly almost, a few days over there. We'll be watching it, but I don't think that, and this is 35 days, I don't think that we need to get any more accurate than that. I think we're good using the mid-cycle low. Boom. John, this is a good one. When I say that the bear market low will be around $50,000, that's to be safe. When I'm putting something, it's hard to predict what price is going to be years in the future. When I did that for what price would be in December 2020, I wanted to make sure that what I put out there was going to be achieved. Remember, I put $18,000 by December 2020, right? Price went a lot higher than that. But when I put it out there, it was unbelievable for a lot of people. And then when come September, price was trading at $10,000. People are like, Jordan, you still think $18,000 by December? And I was like, yeah, for sure. And it exceeded that. I want to put goals out there that could be, that are hit and look good. So $50,000, I believe, is a safe number. I showed you last week why I mentioned it was going to be closer to $65,000. I have the chart up here somewhere. I don't have it prepared for you right now to show you how that all works. I hope you caught. I'm looking for it right now. I can't find it. It's up here though. I didn't put it away because I'm going to revert back to it. I want to. Anyway, you have the video though. I know I'm going to find it. I know when I won't stop. It's because I want to find it. And I can't. All right. So anyway, Jordan, you're rambling. Move on. Stephen, my brother, it's time for you to move on. This is not for you. There's no way I get to where I got to without rambling and meandering. It's just not for you. If you can't invest, the hour a day to get it right, this is not for you. Jordan, looks like Bitcoin won't overtake gold's market cap at 10. Gold under pressure today. Look, it's too soon to call it like a failure on gold's part. You saw it like, Pomp over the weekend saying gold's a failure. It's down since whatever. It's too soon to write off gold. And by the way, look, gold's going to be significantly repriced in our lifetime. I believe that. I sincerely believe that, right?
Is there a use case for gold? Yeah. And I'll tell you what, gold's a lot more private than Bitcoin is. Listen, there's many great uses for gold. I'm a massive gold bug, but I stacked my gold a decade ago. You know, that insurance was put into place a decade ago. I'm not looking for gold, and I'm not going to line up, what gold's doing since 2021. But Bitcoin is all of a sudden putting in significant differences, as you look at from January 2021 to where we are today. I just want to give an idea of what we're looking at, just so I have it in my head and I know. Right? Why can't I find? Let me come to a price chart over there, and let me get onto the daily, and then it'll be very easy to line up. We have right there to where we are today. 60% on the year. We're looking for 70% yearly. Do you think this year you're going to make that 70%, right? Last year was significantly higher, right? What was it last year? Jordan, you're rambling. Last year, 315%. This is now not 30% anymore. It's 60%. Do you think you're going to hit that 70%? Are you thinking looking at something like 700% or 900%? We'll see what it is. 500%. Take out 2022, maybe stand aside during that bear market. All of a sudden, your yearly compounded growth is going to look significantly better. You think you could get that 70 for the next 12 years? If you make a few good choices, throughout the course of Bitcoin and its 4-year cycle, absolutely, you could crush it, in my opinion. You got to put the work in, though. Right? So, Anthony, my take on that is that it's, gold is the most heavily manipulated instrument there is out there. They need to manipulate it to keep the system afloat. Otherwise, everyone will know really quickly that it's all a farce. It will continue to be manipulated until it's repriced. And I believe that it will be repriced significantly. You might want to own some as insurance. And I hope you understand the bullish case for Bitcoin and why Bitcoin is, superior in every which way to the yellow stuff. All right. 787 likes. Thank you for the support, everyone. Thank you so much for being here, for spending the time, for sharing this special time together that we've put it, wow. It's beautiful, and I'm glad to be shoulder to shoulder with each and every one of you. Did you all get to see that podcast that I put out on I tweeted out that podcast that Marty Bent did on Tales from the Crypt? It was with like laser focus or something like that. I have over here, it's the monetary reset, right? Should I take a picture and bring it up for you? No, you can find it on my Twitter. It's on the profile of the Twitter. What a good, important podcast to listen to. Highly recommend it to everyone. If you haven't listened to it yet, make sure that's what you do right now. Have a beautiful day, everyone. Thank you for making mine so much. And a lot. Greg, I've listened to it now 2 or 3. I listened to a portion with my wife, and that didn't go over well. But I want her, listen, you're right, Greg. I'm going to listen to it again, just multiple times. It's a good one. Thank you, Michelle. Thank you, Team Randall. Thank you, each and every one of you. I'll see you all again in the morning. You're ahead of me. I'm going to catch you up. I'm catching up to you today. I'm all over it. Have a beautiful day, everyone. Tomorrow we got to talk a little bit about Ethereum. Alan P. this morning in Ethereum on Discord, putting out a beautiful chart, giving you that hot, strong perspective. Laying it in there that Ethereum lightly leveraged has without question, it can't even compete. There's no question about that. But listen, anyway, we'll talk about it tomorrow. Have a beautiful day, everyone, and I'll see you then.